Hello there, this is the Bookkeeping Master on YouTube. Welcome to this video, how to increase business profits. A bit about me before we get started. I'm a highly experienced and qualified accountant. I've worked with many business industries over the years. I've been doing this for 15 years. I've worked with very small businesses, very large businesses. I've worked for very small businesses and worked for very large businesses. I'm a business owner myself. I have built from scratch two very successful businesses. One of them an accounting practice, the other one a digital business, and they're both very financially rewarding. I have a lot of experience. That's what I'm trying to say. Before we get started, all support is appreciated, so anything I say that you like, please like the video. Any questions along the way, or if you have some input, some things you would like to add to this video, then please use the comments section below. Okay, so let's jump right in. Number one. The first thing you have to do before planning for business growth, the first thing you must do if you want your business to become more profitable is to ensure that you have up-to-date and accurate financial accounts. It is essential, and you'll realize how essential it is as these slides go on. You cannot make any financial decisions for your business without the financial information, without an up-to-date set of accounts. You need a bookkeeper. If you don't have a bookkeeper, if you're not doing the bookkeeping yourself, you need to be doing that. The business accounts have to be up to date. It's made much easier if you have bookkeeping software, accounting software. If you have no interest in doing your own books, then feel free to contact me. I offer bookkeeping services. I am the Bookkeeping Master, as well as a qualified accountant. If you do want to use accounting software, which I really suggest you do, because if bookkeeping software is up to date, at the click of a button, you can generate the reports that we'll be looking at in this video. There is a link below. So there's a link below for like 90% off. It usually is 90% off Xero, which is really popular bookkeeping software. 90% off for 6 months. So it's very cost effective. Just go to the comment section, the description below, and click on that. If you don't have up-to-date books, then the best you can do is use the previous year accounts. So you should have submitted your books to an accountant for the last financial year. They should have provided a profit and loss breaking down sales and expenses and tax. You can use that for your financial making decisions. So your financial planning. Ideally though, you will have real-time data, so up-to-date monthly accounts. If not, use the previous year accounts. Okay, I think I've said enough about that. Sorry for the sales pitch, sorry for the moan, but there we go. This is crucial. If you want your business to be more successful, this is the first place to start, is ensuring you have up-to-date financial accounts, and then building on that, ensure that you understand the financial accounts. If you don't understand the basic financial reports that your bookkeeping software can generate, you need to learn. You need to educate yourself. And this video will really help with that, as well as all my other videos. So check out my website and you can learn for free. Okay, that's enough. Let's move on to this next slide. Your next step, once you have up-to-date accounts or you have your previous year financial accounts, is to review the profit and loss statement. This is the key document. This is the key report that you will need if you want to increase profitability. This is the report. As the name suggests, profit and loss statement. Everything detailed on this report has an impact on the business's profitability. So at the top here we have sales. So your sales, that can also be revenue or income. That is the money being received, being generated from selling services or product, whatever the business does. Next up, we have costs of sales. These are costs that have a direct relationship with providing a sale. And let me give you some examples of that. So if you have a retail shop, your cost of sale or cost of sales are going to be the products that you purchase for resale. So products for resale are cost of sales. They are the direct cost involved in generating a sale. More examples. If you have an e-commerce business, your cost of sales are going to be your products once again, but also your distribution costs. So your postage and packaging will be cost of sales. Your sale is generated by reselling a product and shipping it to the customer. If you provide some sort of service, then generally the cost of sales is like subcontractor costs or materials you have to purchase for jobs. And building on that, if you're a tradesman, let's say you are a plumber, and let's use that plumber example throughout this video because lots of people can relate to like a tradesman business. If you are a plumber, then your cost of sale is going to be those materials you purchase to do the jobs. The radiators, the taps, the tiles, the other consumables that you'll need to do the job. Why is this important? Well, your sales minus your cost of sales is your gross profit. And sometimes this is referred to as gross margin. You could say my gross margin is 50%, meaning we have 50% profit after sales minus cost of sales. So our sales minus the cost of sales, what profit, how much profit do we have after that direct cost relating to the sale? It could be a gross loss. If your cost of sales is larger than your sales, then you really do have a problem. And I really suggest you listen and apply everything that I teach in this video. If this gross profit is too small, once again, this video is perfect. I'm going to go through how to grow that, how to increase that gross profit. If your gross profit is very healthy, it could be your issue with your business is this next line, which is your expenses, your overheads. So your expenses, your overheads, this is everything else the business pays out for. Stationery, travel, motor costs, and it can go on and on. Wages, salaries, fuel, office expenses, software, subscriptions, marketing, etc., etc. So all the other expenses, sometimes this is also called administrative expenses or administrative overheads. Whatever, these are your other costs. So your gross profit minus your other costs gives you your net profit, your bottom line, your overall profit or loss. So that's a quick overview, a quick review of the profit and loss statement. And you might be thinking, well, I already know this. I know how to read a profit and loss statement. This video is a waste of time. But this is purely the basics and we're going to build on this. I just have to ensure that you understand the basics of the profit and loss statement because this is the report you're going to be using to plan for greater profitability. Okay, this is an example of a profit and loss. So if you have bookkeeping software, this is the sort of report the software will generate for you. And you can see with the income at the top here, we have our cost of sales, we have all the other expenses, and then we have this net income. In this case, it's a minus figure, so a net loss. So gross profit, net loss. So sales, cost of sales equals gross profit, expenses, net profit. Or the other way of putting that is income minus cost of sales equals gross profit minus overheads equals net profit. Or in this case, net loss. You can generate this at a click of a button using bookkeeping software. Once again, if you don't have that, then use the link below for 90% off Xero. I'm trying to help you. Okay, next slide, please. This is a really basic principle that you need to fully understand, and it's very basic, and most of you will be able to grasp this. Most of you may already know this, and that is, what influence do sales and expenses have on profitability? If sales go up, so that first line, if sales go up, profits in theory will go up. Sales and profitability, sales and profits have a positively correlated relationship. If you're taking notes in this video, I suggest you take a note of that. So sales are positively correlated with profit. They like each other. So if sales go up, profits should go up. If sales go down, profits will go down. And once again, this is theory. This is not always going to be the case, but in theory, if that sales figure comes down, then profits will likely come down too. They are correlated. They move together. So if we go back to that profit and loss statement, if that income figure at the top, if this sales figure increases, then this loss is going to become smaller, or profits are going to increase. And that's the same with gross profit. To increase this gross profit figure, if the sales go up, this will go up. Any questions? Let me know below. Now, expenses are inverse. They're negatively correlated to profit. So if expenses go up, profits will likely come down. And once again, this is theory. So expenses go up, profits come down. And then on the other hand of that, if expenses come down, profits will go up. So if we're planning for profitability, if we want our business to become more profitable, then what is the answer? What should we be focusing on? Well, look at the right side. Which two increase profits? If sales increase, profits increase. If expenses come down, profits increase. So they are your two key ways to increasing profitability. Increasing sales and decreasing expenses. And I'm not talking about the amount of sales or expenses. So it's not like if we reduce the amount of expenses, the expenses will go down. I'm talking about the overall financial figure. Okay, so increasing this figure, not the amount of sales, increasing this figure should increase profits. Decreasing this figure, so it's a financial thing, not necessarily the amount of expenses. I have 200 expenses going out in a month. It's not about the amount of expenses. It is this figure, the financial cost. If we can lower the financial cost, then profits should come up. So that's what we're going to focus on, is increasing sales, reducing expenses, and how to do that. If this video has been helpful so far, please like. Any questions so far, let me know below. Anything you'd like to add to this? I recognize that I'm not the number one guru. I am not sitting on Dragon's Den. I do know what I'm talking about, but I'm not the king of business. So anything you would like to add to this, to make this more educational, to make it more meaty for my listeners, then please leave something below in the comments section. Okay. Increase sales. This is where it gets a lot more exciting, a lot more practical. So how do we increase sales? What can we do to increase sales and in turn increase profits? Well, the first thing on this list is to increase prices. So if our prices go up, then that total sales figure should go up. And the best way to really recognize whether you should increase prices or not is looking at this gross profit figure, or doing a gross margin calculation. What percentage of profit are we making gross profit? So our sales minus our cost of sales. If this is dropping over time, that is a clear indication that sales prices should increase. Okay, so we don't just want to be looking at a profit and loss for, say, last year. We want to be looking at these figures over a period of year, like consecutively 3 years, last 3 consecutive years, and a minimum to try and see a trend. Is our gross profit going up? Is it going down? If it's going down, that is a clear indication that prices should increase. If gross profit is too low, if that gross margin is too tight, then prices should increase. But there is a warning here, and there's a warning with every point throughout this video. And that warning is increasing prices could reduce the amount of sales. Not as many people may buy. You may have more competition if your prices increase. So it's getting a balance. But I don't think you should worry too much about increasing prices because it is the norm. And what I suggest you do in this third point here is have some sort of cycle, some sort of policy that prices increase by X amount every X amount of months or years. And increasing once a year is very normal. And it should be done. And let me give you an example of this. So I ran an accounting practice. I'm still running an accounting practice. I own it. I work every day in my accounting practice. I did not put my prices up for a number of years. Some of my customers had the same price since they had been with me. And for some of them, that was 5, 6, 7, 8 years. I am not the best at increasing my prices. But about 5 years ago, I decided I needed to increase the business profitability. It was about time that I increased prices, and I did. And good thing that I did, because what happened after increased prices is with this inflationary hit the UK, hit the world. And if I had not increased prices, my profits would not have increased. They would not have stayed the same. They would have actually declined and quite rapidly. My expenses, my cost of sales are so much higher now than they were 5 years ago. So to cover my costs, I have to keep putting my prices up. It's the way it works. And nowadays, I'm much better at once a year, every couple of years, increasing my prices. Now, how much should you increase your prices by? That really depends on how much your expenses have gone up by and how much your competitors are charging. So you want to get a balance between those things. Once again, you'll need a profit and loss statement to see how much your expenses are going up by. And you want your sales to at least cover your expenses. If your expenses have risen by 3% in the last year, then you need to be putting your sales up by at least 3% to cover those expenses. Okay, enough about that. Anything you want to add, please use the comment section below. 3.2, expand your customer base. So sometimes it's not about increasing prices, but just having more customers. Let's go back to that plumber. A plumber that has a much wider customer base, has more customers, is going to make more money. They're going to have more boilers to service every year, more taps to fix, more bathrooms that need fitting. So expanding your customer base is a great way to increase sales. Now, it's a lot easier said than done. And I understand this is a video that's teaching you the theory of how to increase profitability. This is not a marketing video. I am not a marketing expert. Okay, so it might be you want to delve into these things in a bit more detail. But some great ways of increasing your customer base is referral programs, advertising, and you can advertise using influencers. That's a major way of increasing your customer base nowadays, is having some sort of influencer promote your product, your service. Reviews, and along with reviews, having like an online presence. So having an online presence is definitely key. It is essential if you want to increase your customer base. Warning, So what's our warning with 3.2 here? And that is, there is money involved in this. So in order to increase profits long term, you may have to take a hit short term. You may have to increase expenses now, such as through advertising, in order to make more money long term. It's great if you have a business plan. I have a free course all about business planning, freebookkeepingaccounting.com. That's my website. A free course all about business planning. That's another great way to help you know what you can spend, but also help you know where your business is and what you need to do to get it to where you want it to be. Okay, 3.3. Introduce new revenue streams. So expand the products and services that you offer. And I've got a couple of examples of this. So the Bookkeeping Master, this YouTube channel, the initial plan for this channel was to create videos, mainly software training videos, accounting software training videos, Xero, Sage, QuickBooks Online, Cashflow, QuickBooks. I say QuickBooks, what's the other one? FreshBooks. So to create these videos so that people would watch them, they would come to me and I would provide software training. That was the whole point of the Bookkeeping Master originally, was to create this stream of people, this avenue where I could meet people and train them online, train them on Sage, train them on Xero, QuickBooks, which I still do. I still do software training. But the reality is there's actually not enough people wanting training, willing to pay for training to make that a viable business, to make it a profitable business. So what I had to do is introduce new revenue streams. That software training is just one revenue stream. So what I had to do to make the Bookkeeping Master worth doing, what am I trying to say? To make it more profitable, to make it worthwhile, is I had to create the ultimate bookkeeping and accounting course, which is a course on my website. You can learn all about bookkeeping and accounting. It's an exclusive course. It's pretty cheap, to be honest, but it created another revenue stream. Okay, so suddenly I've got the ultimate bookkeeping and accounting course, this online course that people can take, and I have the software training. Okay, so this additional revenue stream made my business more profitable. Let me give you another example. Let's go back to the plumber. I used to have a plumber that only did plumbing, anything to do with directly plumbing. So your taps, your boilers, your radiators. But I wanted a whole new bathroom suite. And there's a bit of work involved in that, such as tiling and things like that. There was a small bit of electrical work too. And this plumber said, well, I just do the plumbing. I can help with organizing a tiler, organizing an electrician, but I will just be doing the plumbing. Fast forward 3 or 4 years later, I have a new plumber. And I say to him, because we never got around to doing the bathroom, I said to our new plumber, I want to do this at the bathroom. He's absolutely fine. I do the tiling. I have people that work for me that can do this job and that job. He can actually do the whole bathroom from beginning to end. He has many revenue streams because he's qualified, because he's experienced in tiling. He can offer that service as well as the plumbing. He's generating a lot more money. If I went with plumber 1, he would have maybe got 30-40% of the sale. My new plumber, 100%. Okay, him and his team are doing it all. So introduce new revenue stream, or just one new revenue stream can make your business more profitable. Going digital. Okay, we don't really have enough time for me to go into that, but creating a digital presence, offering digital products, having some sort of subscription, membership, consulting, coaching, these are all things that you can consider. These are potential revenue streams for you. Having a social media channel with a following is a big additional revenue stream for a lot of businesses nowadays. How many tradesmen do you see on TikTok, on Instagram, who are posting videos of the work they do? It's generating this new revenue stream. It's also expanding their customer base. They're getting new customers through the social media. The warning here with introducing new revenue streams is you spread yourself too thin. Okay, you're trying to do too much, and it's too much for you, and your quality drops, or your stress levels get too high, or you just can't manage it all. So you have to be clever in what you do. But this is another way of increasing sales, is introducing new revenue streams. Hopefully that was beneficial to you. Any thoughts? Leave them below. Okay. Decreasing expenses. Decreasing expenses. 4.1. So if we decrease expenses, our profits will go up, as mentioned before. 4.1. Cut expenses. The first thing I think you should do is go back to this profit and loss statement and go through every expense, not just each line on this report. But if you're using bookkeeping software, you'll be able to click on one of these totals and you'll be able to see what has been allocated to that expense account. So on my accounting software, I could click on, say, this one. What's this? This is legal and professional fee. No, it's not. Insurance. I could click on insurance, 3,700, and that will give me a breakdown of all the expenses that have made that total. So I suggest you do that. Go through every single expense, post it to the accounts, and see if there's anything you're paying for that you don't need to be paying for, and cut it. Don't pay for things you don't need to be paying for. And a very common one are things that come under direct debits. There'll be things leaving the bank account through direct debit, and because they go out every month, every quarter, every year, without you having to physically pay them, you could see that you are paying out for things that you don't necessarily need. So don't just review the profit and loss statement. I suggest you review the online banking and see which standing orders, direct debits are set up. Another warning. The warning here is don't cut off anything that you actually need. Okay, so get rid of expenses that are not needed. 4.2, which is very similar but different, that's reducing expenses. Okay, so there are things that need to be reduced. So reducing expenses. And I've got an example here of a client of mine, and they do a lot of printing. So they print magazines. The revenue comes through advertisers. They advertise in the magazine. They print their magazine. And they deliver the magazine, and then they have thousands of readers, and that's the business model. The print costs just kept rising, had an impact on gross profit, had an impact on the overall profitability of the business. They were increasing prices, but the print costs were rising far quicker than they could actually put up their prices to their advertisers, or comfortably put their prices up for their advertisers. So what they did is they reduced the amount they were printing, and they also launched a digital copy of the magazine, which was emailed out and which was put on an app and things like that. So they were still printing, but they simply reduced the amount of copies they were printing. That reduced their printing bill significantly, increased their gross profit, and increased the overall profitability of the business. There are lots of things that can be reduced, and the first and most obvious one is staff, because wages and salaries are the biggest costs for most businesses. Usually premises is too, like office rent, warehouse rent. So they are obvious ones to look at to try and reduce. Utilities, you can negotiate new contracts, you can use comparison sites, try and get better deals. Interest and finance. If the business has debts, sometimes it's worth consolidating debts under a single loan, or increasing the length of payment terms to try and reduce what am I trying to say? I guess to consolidate the loans and reduce the amount of payments so interest isn't as high. Finance charges too. If you're paying out for company credit cards, if you're paying large bank charges, review them. There might be a way to reduce them. Travel expenses, if more can be done online rather than traveling, or if traveling can be consolidated so you're not doing as many miles, you can get software that can help with that to really help make the traveling more productive. And that kind of falls into the next point: improve struggling with my words. Improve productivity. Subscriptions, software, outsourcing. Software is another big one. Sometimes you find you're paying out for software and you're paying out for 10 licenses when you only actually need 2. So you can reduce the amount of licenses and reduce that expense. Outsourcing, you might find that you can outsource some work rather than have staff do it and reduce the amount of staff. Now, there's a big warning here. Okay, and this big warning is cutting expenses, reducing expenses can have an impact on quality. And that's not what we're trying to achieve. We're not trying to lower quality or customer service. We're trying to increase profitability. And it's important that those things are not lowered. It can also have an impact on morale. If you're laying off staff, if you're reducing someone's hours, if you're not giving them pay rises, then that can have an impact on morale. Once again, not worth doing. So you need to get the balance. You need to be tactful in the decisions that you're making. Okay, I am speaking a lot, nearly 30 minutes now. I need a drink. Okay, 4.3, improve productivity. Improving productivity is all about getting more done with fewer resources. Okay, so getting more done with fewer costs. Things like AI software is a great way to improve productivity. Lots of businesses are now using AI, and it's replacing work that staff used to do. Not necessarily have to lay off staff or replace staff with AI. That staff now have more time to focus on other things because the AI is doing those tasks that AI can do. Software, I mentioned software with traveling. There is software out there that can improve productivity. If you're using bookkeeping software, that's great. Ensure that you use things like banking feeds and auto post transactions. It can save so much time, and that's what we're trying to do, is save time. Training staff, training yourself on how to be more productive. It's really about setting goals and quotas. You can offer incentives. You can educate yourselves. You can have fewer meetings, so there's more time for work. And there is a warning here, which I haven't put on the slide, and it's the same warning as before. Just ensure that your strive to improve productivity, to increase profits, doesn't actually lower quality. There are some meetings that have to be had. Just make those meetings effective. Okay, I've said a lot. I hope this video has been helpful. Thumbs up. Any questions, leave them below. Anything you'd like to add, leave them below. I have plenty more videos like this. Check out my website, freebookkeepingaccounting.com, or Google the Bookkeeping Master, or just go to my other videos. I am the Bookkeeping Master, and I'll speak to you in another video.